So today we are going to be talking all about screening and setting up a screening routine. So Scott is the perfect voice of expertise for this topic. He's going to walk us through the Barron's value and momentum screen that we have in MarketSmith. So IBD and Barron's collaborated to create this screen. So we'll walk through the parameters that we have for that. We'll even analyze a couple of the stocks on that list in real time. We'll also go over where you can find the Barron's 400 list in MarketSmith. So another great place to find potential trade ideas, and we'll talk about how to set up a screen of your own. Because Scott, whether you are a super active trader or maybe you trade less frequently, but you're still managing that portfolio and picking individual stocks, maybe you have a bit longer of a time horizon, but screening is a very important part of the process, no matter what your trading personality is.
I agree. Even if you're not actively taking all these potential ideas, it does give you a good idea of where the market is going, the shift in the market. If you missed the oil and gas energy trade, which started real early this year, screening would have helped you spot that, because those stocks, as they started to exhibit relative strength, and then a lot of those companies started to report quarterly earnings, they start showing up on screens. And that's how you can stay in sync with the market, because it's constantly ebbing and flowing with different groups and different sectors and different narratives that are coming and going. And screening is the best way that I know of to stay on top of that.
Absolutely. So before we talk specifically about that value and momentum screen that we have in MarketSmith, it seems like a part of the routine, this is something that we've talked about before, but having maybe a wider universe list just to get a finger on the pulse of the overall market, and maybe that uncovers strength where you wouldn't have expected it to be. And then from there, you can really narrow down the list. Is that roughly a sort of strategy or an approach that you would recommend? Or if someone who's new to this approach to stock selection, where would be a good place to start?
Yeah, there isn't a perfect screen, unfortunately. So it'd be great if we just told you these are the 10 new market leaders or whatever. Every company / stock has some kind of flaw where it could miss a screen. Maybe it makes 8 of 9 criteria or 10 of 14 criteria. And I think you still want to have those stocks on the radar. So really want to cast a wide net and then reduce that based on, your own analysis. I think you want to grind a little bit. There's nothing easy, and anything worth having, it takes a little bit of work. And I think Peter Lynch said, if you turn over 10 stones, you might find one gem. And Peter Lynch is a former mutual fund manager of Fidelity. I kind of assumed everybody knew who he was. I apologize. But most people do know Peter Lynch. Amazing track record when he worked at Fidelity. But if you turn over 10 stones, you'll find one gem. If you turn over 100 stones, you might find 10 gems. So I think you want to turn over 100 stones. You want to grind and do the work and do lots of screening. And honestly, I really believe and have been practicing this for years and years and years, just one day a week. Just pick a day, ideally on the weekend when the market's closed. You're less influenced by the gyrations in the market day to day, and do your screening and build your watch lists then.
Mm-hmm. I think that's a great place to start. And so for the Barron's audience, there is somewhat of a value bent or a growth at a reasonable price, which is why we created the value and momentum screen. So Scott, any more context you might be able to provide on the parameters of this screen as we dig in?
Sure. So it's trying to find quality companies, earnings, something of that nature, reasonably priced, whatever that might be, right? I guess that's subject to debate. But we also want stocks that are showing some type of relative performance. So we've combined those two. The RS rating, the IBD relative strength proprietary rating, has to be at least 80 or better, which means it's in the top 20% quartile of stock performance going back 12 months. The PE percent rank is less than 25. So it's less than the 25% of the market's overall PE rank. The price greater than 10, just something to keep, filter out the lower price stocks. And then market cap and average volume. So it's designed really to find cheap relative to the market stocks, but also with some type of relative strength. 80 is not too stringent a relative strength characteristics. Ideally, I'd prefer to buy 95 or better relative strengths, but you got to start somewhere, and this is create your universe. And currently, it's very small. The market's not great, as everybody knows. As we sit here today, there's only 31 names. But it can expand, and I guess it could contract to less than 31. Let's hope not. That would be a bad market.
Yeah, we don't want that.
Yeah, but it can expand as the names get better and the market gets better, more names move up. It could expand to 50, 100 names, whatever it might be.
Right. And I'm going to pull it up here momentarily, and we will do our best to explain this with as much visual aid as least amount of visual aid for those listening later is what I'm trying to say. For the audio only podcast version of this later, we will explain to you what we are looking at. But Scott, you mentioned relative strength, and maybe that could be a way that you sort the list. Maybe you get the screen results, and if you want to look at the high RS stocks first, that could potentially be a way to sort. I mean, there's plenty of ways to sort the list, but I'll have you walk us through how to get there. So I'm sharing my screen now. I have it open on a chart on MarketSmith. So we're going to start from scratch of how you would navigate to this new screen. And that starts with opening this left-hand panel here, and then opening up this MarketSmith Stock Screens tab. And then if you scroll down, there it is, Barron's Value and Momentum. And then that opens up the bottom panel. But before we do that, I actually made a copy of this so we can look at the parameters. Scott, I'm sure there's plenty of ways to do this. But as you were talking about here, we can see on the right with the summary of the screen, the various parameters there. So if you could go ahead and recap that for us once again.
Yeah, so there's the RS that we talked about, the PE percentile rank, the current price. And so this is a pre-built screen that you've now copied. You could edit this copy if you wanted. If you wanted more names, for example, click on the RS rating and make it 70 or something like that. If it got really large, you could even edit it the other way. So let's say there was 250 names in there. You're like, whoa, that's just too many. Then, I would reverse edit, add a RS rating of 85 or something like that. So, but that's the way it's currently built in the pre-built settings. So you don't have to do anything if you don't want. It makes it real easy. Just to click on it. The names will show down below. They'll show in alphabetical order. And like you mentioned, it's funny you said that, because that's exactly what I did. I just clicked on one of those column headers, sorted it by relative strength, and CF Industries is the first stock that comes up. Oxy is on there. Petrobras. You get the theme, right? Chesapeake Energy, Continental. So yeah, and so now that's where the money is flowing as far as strength in the market. 6 months, 6 weeks, you fast forward and it could be different, and that's why screening is important to stay on top of that potential change.
Exactly. So we can go through some of these stocks here. So that's the other thing to keep in mind. Even if you have a screen that, okay, these are ideas that check all the boxes of things that I'm looking for, that growth at a reasonable price, it has that relative price strength, it's trending in the right direction. Well, you can't just throw darts at a dartboard blindly. Then it comes down to, okay, what is that stock actually doing? And the market having that backdrop as well, in order to know if you should be putting these ideas into action.
Yeah, the market is the ultimate factor. It's it's hard to swim upstream, and so ideally you want the wind at your back with the market environment. Although this year has been a little bit unusual because the market's is not been very good, but some of these stocks have had good years, kind of contra to the market. But mostly throughout history, you're going to want to have the wind at your back a little bit, or at least not have a headwind, if the market's just going sideways or something like that. I think you can find good ideas. There's always somebody out there innovating. There's always some company out there doing really well in a sweet spot in their industry or on a macro level. So if you just don't have a headwind, I think you can find those stocks. Now, the market's been a headwind for, most of the year this year for sure.
Right. So the market, that's most important, and something we've talked about on previous Barron's Live episodes in the archive. So would definitely recommend checking that out if you missed our chat on that. We've also talked about buying stocks, looking for proper buy points, selling into strength. Scott, that's the one episode that you and I did together earlier this year. So we won't get too into the nitty gritty on that, but just a couple of things when it comes to finding proper buy points would be looking at where a stock is in relation to its moving averages, making sure you're not buying extended as a stock has made a big move. But so for people who are more in that value mindset, maybe they're not thinking of buy points in the same way. So if that is that primary, what am I trying to say here? Primary approach that people are primarily trying to use with their trades from that value perspective, what might be some good tips for them of where to find these proper entries that are still fitting their frame of reference, perhaps?
Yeah, I think from a standpoint of the value side, if you're trying to buy that way, then you probably want to buy much closer to the 200-day moving average, which is that black line right there. Or if you're on a weekly chart, that would be the 40-week moving average. And, we didn't cherry pick this. It just happened. They don't all work out this great, but that would have been a fantastic buy on CF, buying, right there at $80, $81, somewhere in there off of that moving average. And you're up, 25% or so as we sit here, even after this, little mini pullback the last couple of weeks. So if you like to buy like that, I think you want to buy off of moving averages, 40 weeks, and then maybe the 10-week moving average. If you don't want to buy breakouts, then that's fine. Everybody has a style. I watched IBD Live this morning. Charles Harris talked about breakouts not working this year, and he likes to buy pullbacks like this. And fast forward 2 years from now, breakouts are going to be going crazy. And, so it ebbs and flows all the time. I've been through this for 25 years. Sometimes breakouts are incredible and it just feels like they just go nothing but up. And sometimes they get choppy. But so you really, it's a whole nother Barron's Live. Allie, you got to have a strategy, right?
Maybe the next one.
Yeah.
We can do that.
So find your strategy. And I think, and I've experimented with this, I'm not very good at it for sure, but I'm trying to get better. The CFs, the Costcos, the Targets, some of those other companies that I think about. I think the best way to buy those kind of mature, bigger businesses is off of these 40-week or 10-week moving averages rather than buying breakouts. I think the breakout probabilities are lower in that regard.
I think something else important to point out, speaking of that momentum piece of a value and momentum screen, as you mentioned, is that relative strength. And these pullback buys off of those longer term moving averages are in the context of an uptrend. And maybe you do see a little bit of a bounce, a confirmation of that support at a longer term moving average to get you in. What are your thoughts on that?
Wholeheartedly agree. It's very good observation, because we want to buy stocks that have shown they can make a move. And then if you want to buy the pullback, do that as well. So a stock that's gone from 10 to 30 and then pulls back to 20 and then comes back through 25. You don't want to just assume it's going to stop going down
Right.
on a moving average, because a lot of times they won't. And in the end, we believe in a loss cutting strategy. So no matter how you buy a stock, if you're following our rules, you have a plan to get out in case it goes wrong, whether you buy a breakout, whether you buy a moving average, or whether you use the cube, what's the 8 ball, the magic 8 ball. Use whatever you want. Just have a plan to get out if you're wrong. I think that's the rule number one.
Right. Yeah. We always talk about how hold and hope is not a viable strategy. Even if you do believe in something long term, maybe your timing was wrong. Maybe your timing was off, and you could be sitting on at the very least just a loser, something that's gone dormant, while you could have been putting your money to work elsewhere. So there is that opportunity cost element as well.
Yeah, we call it dead money. You can buy something and have it go sideways for 10 years. And in the meantime, in a perfect world, it could be in other stocks that are working. Mm-hmm. It's a dance that we do with the market. We want our money working all the time, but it's not always going to go. You want to be patient with the stocks to have a big win like CF, to ride a stock from 30 to 100. You're going to have to endure some wiggles, and admittedly they're not easy.
Mm-hmm. But it's always good to have that to withstand that from a position of strength, being up on the stock, not being down 20% first and hoping you can come back from that.
Yeah, the wiggle is with the market's money versus my money, right? If I ride something from 40 to 50, I ought to be able to watch it wiggle from 50 to 45. Mm-hmm. I don't want to buy it from 50 to 40 and just say, well, I'm being patient. I'm going to let it wiggle. That's a little different.
Yeah. So a little detour there from screening to talk about position management, but we can't help ourselves. It's just, they go hand in hand. So really quickly, before we talk about the Barron's 400, maybe we'll just analyze one more from the list. And Scott, PBR, I know this is one that you are in, at full disclosure. I am as well. But let's also talk about the qualities in this beyond the value and momentum that this has. So once you have this screen up, then you can look at other ratings and rankings and information, valuable information that also might help you in that decision-making process that might be good to highlight here.
Correct. So this is a stock I found through screening, and honestly, I can't remember. It could have been this screen. I don't remember how it showed up on my radar, but it showed up coming up the right side of that cup. And then it's like, oh, this is really strong in face of a kind of a weak market. Remember, a couple of weeks ago, the market was going down almost every day. And so then it just comes down to proprietary ratings that we have at IBD. The EPS rating is 78. It's not as high as I'd like, but it's fine. It's in the, it's top 20%. And then the composite rating, which is a great overall rating, is 99. At the time, I don't know if it was 99, to be honest, but it was high 90s for sure. And so these things can help you make decisions. And then there's two things that there were three things that stood out. The strength in the stock in the group, it's in the right group. Mm-hmm. The quarterly earnings, look at the last couple of quarters. Look at the turnaround in earnings. $2.78 versus $1.32 in the quarter ended June 30th. How about the quarter previously? $2 and change versus 3 whole pennies. So it's, the earnings gushers are on, and that's what moves stocks, earnings. You need stocks with earnings. And then last but not least, you open up that related information panel, and we're looking for sponsorship, right? So owners and funds. And there's my favorite mutual fund, which is Fidelity Contra Fund. And I say Will Danoff is the manager. In the quarter ended September 2021, he didn't own this stock. He purchased 1.37 million shares in the next quarter. In the following quarter, the first quarter of this year, 2022, he went from 137 to 775. It's a huge delta change in his position, right? He's starting to get conviction. I've heard him on podcasts before. He talks about like it's a poker game. I have a hand. If my hand gets better, I want to put more chips in the pot. If my hand gets worse, I want to take chips back or check in this case and not put any more money in there. So his hand is improving with this stock. That's what he's saying by increasing his position that quarter. And then the following quarter, he increases it again. Now, not quite the delta, but he's adding to his winner. Yeah. That gave me a lot of conviction in this stock. And so I had a really good position size for that move from. Now, remember, this stock is adjusted on our chart for the dividend.
Yes, great to point out.
Paid. But I think I paid it, pre-dividend, it went from like 14 to 20 or something like that. Once they adjust for the dividend, it's 11 to 15 was the move, which is pretty good, 25%. Plus the dividend. The dividend hit my account today. Finally got it.
There you go.
At least one of them.
Yeah, I think they split it up.
Yeah.
But and then I think just another fun little tidbit. Doesn't Danoff use? I mean, I know he's a big O'Neill, Bill O'Neill, IBD's founder, fan or follower. Do you know if he uses MarketSmith or maybe the institutional version of a charting platform like this?
I would be surprised if he used MarketSmith. I would not be surprised at all. Yeah, this is more retail.
Yep.
Yeah. But Panerai/Wanda, I would almost guarantee that he has used or uses that. When William O'Neill celebrated their 50-year anniversary, there was a great video that the company put together. Have you seen that video, Ellie?
Yeah, it's been a while, but yes.
And Will Danoff gave a testimonial, which was really cool. And I don't know, I have a great Will Danoff story. I guess it just matters if we have time. Maybe
for it.
Okay, great. So I went to the MTA, which is the Market Technicians Association in New York. And I believe the year was like 2011, 2012. I was really new at IBD. And MarketSmith was relatively new. We had just changed the product and changed the name from Daily Graphs. And a gentleman comes up to me and says, "What's MarketSmith?" And I said, Investors Business Daily. We used to be Daily Graphs. And he says, Bill O'Neill. And I said, yeah. He goes, I did work. I can't remember if he did at the time. He no longer does. But he says, I work at Fidelity. Let me tell you a story. Because I was talking to Will Danoff. I was in his office talking to Will Danoff, and we were discussing a stock. And we were going back and forth on it. And Will says to me, let's see what Bill thinks. And they called up Bill O'Neill and asked him what he thought of that name. So roundabout way of telling you that, Will definitely understands and values the process. Now, the way we buy and sell, he can't do that. I don't know. He's running, tens of billions.
Right.
It just can't do that. But the process of identifying winners and, earnings and sales and group strength and relative strength, I would guess is fully ingrained in how he thinks about stocks.
Well, that is a great story there. Thank you for sharing that, Scott. So in addition to screening for value and momentum, you can also check out that sponsorship that might give you just a little bit extra conviction, because following the big money is something that's very important to be doing. And we've seen that prove itself time and again in the market. So you're very dialed into what's going on the sponsorship front as well.
It's a big proponent. There's no make or break indicator. There's nothing like I would never buy a stock if this.
Yeah.
But it's a puzzle piece, and you want to put that puzzle together as best you can, make an informed decision, and increase your probabilities ever so slightly. Maybe it's only a little bit, but over a lifetime of investing, 2, 3, 5, 10% edge is monumental. And then if you're wrong, you get out, and you may revisit that name again, but you just rinse and repeat over and over and over, and just try to stay on that course as long as you can.
Absolutely. I'm going to share my screen again. And before we talk about the Barron's 400 list, let's also talk about how you could maybe tweak this screen if you wanted to, or use that to maybe riff off of and set up your own screen. So something that I see with a number of Barron's-minded investors, not to lump anyone into a category at all, that's not what I'm trying to do, but even on IBD Live, I see a lot of people who are interested in dividend-paying stocks. So we talked about the dividend with PBR. So this screen also perhaps capturing a number of dividend payers. But what if you wanted to add that as a parameter to a screen or set up your own screen? Might that be something of interest?
Yeah, and you could do that. So you could change the, we talked about very briefly the changing the value momentum one, but if you'd like, you can screen the Barron's 400 list. And so the normal screening is the entire MarketSmith database, which is roughly, 5,000 plus stocks and ETFs. But if you just wanted to say, okay, inside this Barron's 400 list, show me the stocks that have a yield of 2% or more, something like that. And that's something you could build in the screener. You could customize that.
Okay, great. So we'll walk people through that first.
You want to do that? Okay.
Yeah, first let's show them the list itself. So you open up the bottom panel, reports, stocks. Then we're going to scroll. Actually, we're going to, scroll down. And then here it is, Barron's 400.
Correct.
So right now, 396. So roughly 400. What would you be doing to sort this list? Would you also sort it by either composite or RS?
I think either one. At
the entire list?
Yeah. I usually like to sort if the list is large. So if it was for something like this, I would definitely sort it. And comp rating is a great one, or relative strength. I think they're going to be very similar because part of the comp rating is relative strength. But I don't think there's, however you prefer to sort it, I think would be fine. Any of those ratings.
Okay. And then, same process there. You could just space bar through, take a look, see where that stock is in relation to its moving averages, and depending on your style or your trading personality, see if it fits those parameters, and of course, know what the overall market is doing. So now let's go ahead and build that new screen, Scott. So walk me through that. I'm going to open up the left-hand panel and then create a new screen, right?
Yep, perfect. Click on new screen. And in this case, it would be a new stock screen. We do have a mutual fund screener. Okay, go ahead and name it. It's going to force you to name it.
Okay.
And then the little pop-up here. So now you can see over on the right, it's just blank, right? And all of these folders that when the dull orange are categories that you can choose to screen from. Just above that, Ali, it says screen from MarketSmith database. And you can see it's, including ETFs and closed-end funds, it's 9,600 plus. See that? So we're going to change that. We're going to, go ahead and click on it. And we're going to choose the Barron's 400 instead.
Yeah. So we'll navigate it to the same, it'll navigate the same way as down below.
Correct. It looks exactly the same. Yep.
Open up those folders. And then here we go, Barron's 400. Anything else I need to click here before I hit select?
Yep, go ahead and do that.
Okay, great.
And then it should say instead of screen from perfect, Barron's 400. And now let's go ahead and add in the dividends. So that would be in the margins and ratios portfolio category. It's the very first one, luckily. Makes it easy. And just put in your minimum criteria.
So maybe that's 2%. Does that seem reasonable?
That's good. And if you want to max, you can. Why would you want to max? Well, if a company has a dividend yield of 30%, and something's going on there, right?
Yeah.
So you can leave it blank if you want, but if you wanted to input
what would you do, Scott?
I would just leave it blank. I would just leave it like that. And your results are on the right. And you can see we've gone from 396 to 143. And so in the Barron's 400, there are 143 stocks with a yield of at least 2%. They're going to show up down below in that list panel, initially in alphabetical order, AbbVie, American Eagle, et cetera. And then you could sort this list. Now, in this case, I might sort this by yield if I, because that's what I'm screening for, and just bring the high yield ones to the top.
So I need to add that as a column. It looks like
it should have showed up, but yeah, maybe it didn't. It did for me, and so maybe it's the default.
Okay. So show me how to do that. We're going to open up this wrench here.
Yep, and go to customize column layout.
Okay.
And go to the margins and ratios tab. There you go. Yield percent. Just drag it down there, and then the arrow will show you where you're going to place it. So I'd place it more to the left. That way it shows up sooner. There, that's fine. And you can play with this as well as how you move them around, but then hit apply.
Apply. There it goes. Okay, so sort by yield.
Yeah, and you should get Golden Ocean on top. At least that's what I got. And there, the yield is based on trailing 12 months of what they've previously paid. That's how we do it. It's not like their projected yield or anything. And so you can see that one's really high. Shipping stocks tend to do that. Reminds me of Zim, Zim Holdings. Then there's MSB, which is a mining ore, Eagle Bulk, Yuan, which is nitrogen, fertilizer, and so on and so forth. So now you just go through this list looking for ideas that it's got the yield you're looking for. Now does it have the setup, liquidity, et cetera, that I'm looking for?
Right. So CVR here, ticker UAN, that's a pretty hefty yield, 15%. What do you think about how this stock is acting?
I actually do own UAN, not for the yield. I don't tend to buy for the yield. The yield, if I get it, is a great bonus.
A little cherry on top.
Yeah, exactly. But yeah, it looks like a great setup to me. It's acting really well, and it's in the right area. Energy / fertilizers. It is, and we'll go down the rabbit hole. If there aren't any perfect stocks. It's a little illiquid. It trades 112,000 shares, $130 stock. Tends to trade with a bid ask of like $1.50 sometimes. And I think I talked about this on IBD Live. You buy 1,000 shares, you could be down $1,500 immediately based on the bid and ask. So something to consider. But this is how I think about stocks. I look at all those things, and then that will help me to. That little tidbit would probably help me to consider my position size. And in fact, it is, a little bit smaller than I normally like based on those factors.
Right. Great tidbit there. And then also, in addition to maybe buying off of a bounce off of the 40-week, let's talk about some other strategies for getting into a trade. This stock was retaking the 50-day line right around earnings. So maybe you could wait until earnings are out of the way, just so that risk is off. It's retaking the 50-day in volume. That earnings report is out, and then also pullbacks to the 21-day. Is that where you were adding, or were you getting in when it was getting back above the 50-day, Scott?
So the former is a great strategy. I love that strategy because it also gives you a really great risk reward setup. So if I buy it at 100, just to make the math easy for myself,
it's basically right.
Assuming it's going to get through that 50-day and run, and now it's got free sailing, so to speak. If you did that, you've got 34% gain so far. And if I'm wrong, it's not going to hold that 50 days. It's going to come back down through it. So I can use in this case, it's a little tougher to use a tighter stop, but I can get out at say 97 or 96 because it broke expectations. It didn't do what I thought it was going to do. It should run through that moving average once it closes above that and the volume is picking up. So I've got, let's say, a 4% stop loss, barring some kind of gap down, unforeseen circumstances where my loss would be larger. I'm risking 4% for the chance to make, in this case, 34%. That's a really good risk reward ratio. And also, if for the chance, who knows, if it breaks out through 140, I might buy more. And if it runs and makes a new high to 165, you see the asymmetry of that is just so skewed in your favor.
Right.
You don't have to get these that often. You don't have to, it's not like this has to happen. It's not like a coin flip, where you
Yeah.
have to be right every other time. You could be right, 2 out of 10 times in
Mm-hmm.
scenarios like this and do really well in the market.
Mm-hmm. A great walkthrough of that, Scott. Thank you. We could dig even more into this topic, but we'll have to save it for another Barron's Live. I do want to get to a couple of audience questions before we go. We always appreciate questions from the audience. So Bob is asking, so this is about what we were just talking about, where to buy. So if you do buy off of a bounce from the 40-week or the 200-day moving average, what would be the max price to buy at? Would it be 10% above the moving average? I guess it all depends on how much you're willing to risk, right? If you buy off of a moving average, that assumes that what you were just talking about, you're using a decisive close below that as your expectation breaker. So that's where you would get out if you were wrong. Can you dig into that a little bit more, Scott?
Yeah, that's too far for me. I wouldn't wait for it to move 10% above the moving average. I would already be in. And yeah, and remember the way I like to do it and the way that we do it at O'Neill or did do it at O'Neill and the way it's been classically trained is you want to add to the winner that's working, like I talked about with Danoff and PBR. Mm-hmm. So if I'm going to buy a pro bean starter, my first position, buy one, whatever you want to call it, there's a million ways that everyone calls it. But I'm going to buy. Yes, I'm going to buy a position, and then I'm going to wait. And if it starts to work, I'm going to buy more of that. It's going to be lesser quantity, but I'm definitely going to follow up almost every single stock I buy. If it goes higher in price, even by just a couple of percent, I'm buying a second time, and then I will adjust my stop accordingly. So I think if you're waiting for 10%, like total confirmation that it's bounced, you're going to miss part of the move, and then you could get shaken out. So just if it's hard, if you like, I don't have that problem now. I trade too much. I have no problem getting into a stock. I just shoot
and getting out if you're wrong. Yeah.
Yeah. I just get in and then let's see what happens. Boom. I like that. It looks good. Let's get in. Let's get a position. Hey, it's the market's confirming. I'll buy more. If I'm wrong, I take a small loss on a small position. Some people might have the opposite problem, that they hesitate, they can't pull the trigger. So then just reduce your position size. If the position should be 1,000 shares, but you just can't seem to bring yourself to buy it, then buy 400, buy 300, do something. Once you're in the stock, I think you'll find it a lot easier to buy more of it. That's the holy grail in investing, I think. Is buying more, adding to a winner, because it doesn't work all the time. It doesn't even work a lot of the time. But some of the time, you get one that goes and goes and goes, and you've added and you've added and you've added, and now you have a concentrated position in a stock that's really moved. That's how you can move the needle on your overall portfolio.
Mm-hmm. Absolutely. And especially if you are using something like a buy off of that 40-week line as your primary strategy, we like buying as close to that moving average as possible, waiting for a bit of confirmation of that support, as you were saying, not just something that's going to continue slicing below a 40-week line, but starting to move above it. But if you are using that level as your stop, then having that risk reward close to the moving average is something that can be helpful. But it just comes down to your trading personality. But that's something that we like doing is making sure you're not buying too extended from a moving average, Scott.
Correct. I think 10% is extended from a moving average. Now, I don't want to buy it the second it goes a penny above the moving average either. I want some type of confirmation. Ideally, sometimes I'll wait to the end. I do most of my buying actually in the last hour of trading. Really want confirmation the stock is strong that day. And so when you look at that, it actually closed on the very high of the day above the moving average. The very next day it was up again, and the very next day it was up again. Now, the following day it was down, but it wasn't down more than where you first started buying.
Right.
and even your second buy wouldn't have gotten. And then it went sideways for a little bit, and then it ran from 108 to 139. So you never really underwater if you did it that way. If you bought 300 shares, 100 shares, 50 shares, every 2% up, your average cost would have always been below the stock. You never would have been in trouble, and you could have participated in that.
All right. Thank you for that, Scott. We will get one more question in. Ashwin is asking, Scott, is there a custom screen that you use? So I guess your favorite screen, or maybe your favorite screening parameters. I know you run a lot of screens, so what would you say?
Yeah, I have a lot of favorites. I like RS line new high screens. We now have a parameter for RS line within 5% of new high, which I'm playing with to try to kind of build on that. I have screens for just fundamentals. Show me all the best companies fundamentally, and then I will kind of filter them out based on when they start to show strength. So I guess if I had to pick one, RS line new high would be my favorite, especially in a poor market environment. It works. It works the best. It's just going to show you all the stocks that don't want to go down. The market could be down 20%. XYZ is down 12%, and to the untrained eye, that looks bad. The stock's down 12%, but when you consider relative to the market, that stock's beating its chest, and the RS line new high would help you identify that.
That's a great point there. All right. Well, as we wrap, Scott, what would be your final takeaways? I mean, there's a lot of different parameters that you can use to screen for stocks, but you don't want to make it too complicated either. I think there might be a sense of it could get overwhelming with all of the different factors that you could play around with. But what would be your biggest tip for screening for stocks to fit your trading personality?
Yeah, I think you want to cast a wide net, but you don't want to go in gangbusters and say, okay, I'm going to screen for 4 hours. I'm going to look at 5,000 stocks. I think you want to just sit down at your computer on a Sunday. That's the way I do it. And I just say, I'm going to do this for an hour. No matter what, I'm going to do this for an hour. Everybody can find an hour. I don't care. I've got 2 kids. I've got a job. You can find an hour, believe me. And then sometimes an hour turns into 4 hours because the market's just that way, and there's a lot of potential ideas and stuff like that, but not always. And so, but the routine, the consistency of it is what's vital. Like, it's like going to the gym, just get in there and just say, I'm going to stay here 20 minutes. And you know what you'll find? A lot of times you're there longer than 20 minutes, but you don't know how many times I've said, I'm going to the gym. I'm only going to be there 20 minutes. I'm tired. I don't want to do this, but I just, it's habit. It's habit. It's routine.
Gotta make yourself go. Yeah.
Yeah. So make it a routine. Make it a habit.
Yeah. And then, like you said, when market conditions are great, all of that hard work is really going to pay off because you aren't going to be looking left and right saying, oh, I missed that one. I missed that one. You're going to be ready.
That's so true. And believe me, I've experienced in 2009, I'm the base case for why you don't want to do this, because I really fumbled the ball in the 2009 bull market because I was not prepared. I thought it was a bear market rally. The market had gone down so bad, and I was just beat up from the negativity, and just thought, oh, this is just another bear market rally. And it took me almost the entire year of 2009 to kind of flip that switch and say, hey, I got to get back to work. There's stocks that are working. So you don't know. It could be today. It could be today. It could be the start of a new bull market. You don't know. It seems unlikely, but you don't know for sure. So yeah, be consistent, put that work in, and you'll have a huge leg up on everyone else who waits for the perfect confirmation that the market's okay. And guess what? The best stocks aren't going to wait for you. They'll be long gone by the time it's obvious that you want to be invested.
Right. Well, some great words to end on there, Scott. Thank you so much for sharing your expertise with us today on how to set up screens, looking at value and momentum in the Barron's 400. We even sprinkled in a dividend filter in there as well. So that was a lot of fun. Thank you, Scott.
Thanks, Allie. Anytime.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.